Syngenta, a global powerhouse in agriculture known for its innovations in seeds and crop protection, almost faced a monumental downfall due to a mistake that could have cost it billions.
Some of the world's biggest companies are now issuing sustainability reports in a bid to cut their carbon footprints. But is it just PR or is there real commitment?
This Swiss-based global powerhouse, a beacon of technological advancement in farming, suddenly found itself facing the unthinkable. A single mistake, a colossal misstep that threatened to wipe out billions.
545,000 tons of MIR 162 genetically modified corn were returned.
Financial ruin, a shattered reputation, and legal chaos loomed large as the world watched, wondering if this agricultural giant was about to fall. What was this monumental mistake that nearly brought Syngenta to its knees? And more importantly, how did they pull off the impossible, emerging not only intact, but stronger than ever before? Stay with us until the very end, because in this video, we uncover the extraordinary steps that Syngenta took to turn their impending disaster into a stunning victory. This is the story of how one of agriculture's greatest giants stared down defeat and made the impossible possible. Syngenta was officially founded in 2000, but its roots go back much further. It was formed through the merger of the agribusiness divisions of two well-established companies, Novartis and AstraZeneca. Novartis, a Swiss pharmaceutical giant, was known for its research in crop protection and chemicals, while AstraZeneca, a British-Swedish multinational, had significant expertise in agrochemicals and seeds. The merger created a new entity solely focused on agriculture, marking the first company to combine both crop protection chemicals and seeds into one business, an important step in addressing growing agricultural needs worldwide. At its founding, Syngenta was based in Basel, Switzerland, and quickly established itself as a key player in agriculture by leveraging the research and development expertise it inherited from its parent companies. During the early 2000s, Syngenta grew rapidly thanks to its strong portfolio of products in herbicides, fungicides, and insecticides, along with seeds for crops such as corn, soybeans, and cereals. The company's focus on innovative solutions to improve crop yields and combat agricultural challenges like pest resistance and climate-related stress set it apart from its competitors. In 2004, Syngenta made a major strategic move by acquiring Advanta, a globally recognized seed company with a strong presence in multiple international markets. Advanta, headquartered in the Netherlands, was known for its extensive portfolio of high-quality seeds, particularly in crops such as corn, sunflower, sorghum, canola, and vegetables. This acquisition was pivotal for Syngenta, as it not only bolstered the company's existing seed division, but also gave it access to a wider array of seed varieties and a stronger foothold in regions where Advanta had a well-established market presence. Prior to the acquisition, Syngenta had already been a dominant force in the crop protection industry, with a robust lineup of herbicides, insecticides, and fungicides designed to help farmers manage pests and improve yields. However, the seed business, while growing, was not yet as significant a part of the company's portfolio. Acquiring Advanta allowed Syngenta to integrate crop protection with seed technology, creating a more comprehensive offering for farmers. This alignment between seeds and chemical protection solutions allowed Syngenta to develop more tailored agricultural products that addressed both plant health and productivity from the ground up. Furthermore, the acquisition expanded Syngenta's global footprint, particularly in key agricultural markets like India, South America, and parts of Europe, where Advanta had a significant presence. Advanta's deep research and development in hybrid seeds also provided Syngenta with enhanced capabilities in breeding and seed innovation, particularly in crops suited to varying climates and growing conditions. The company's hybrid varieties in sunflower and sorghum were especially valuable in regions with challenging agricultural environments, such as drought-prone areas. This deal not only fortified Syngenta's seed offerings, but also aligned with the company's long-term strategy of becoming a global leader in integrated agricultural solutions. Syngenta's ability to offer both seeds and crop protection products gave it a competitive edge, allowing farmers to rely on a single company for a range of essential agricultural inputs. By combining Advanta's seed expertise with its own chemical solutions, Syngenta could better support farmers in boosting productivity, managing risks, and adapting to the pressures of a rapidly changing agricultural landscape. Moreover, Advanta's seed technologies, particularly in areas like hybridization and genetic modification, complemented Syngenta's ongoing research in biotechnology. This synergy between the two companies enabled Syngenta to accelerate its innovation pipeline, bringing new advanced seed varieties to market more quickly. By integrating Advanta's R&D programs with its own, Syngenta could further develop seeds that were not only high-yielding but also resistant to pests, diseases, and adverse environmental conditions. But something sinister was brewing in the horizon, and it made the company make a billion-dollar mistake. What happened? And how did a company that seemingly had it all, a vast market presence, cutting-edge technology, and deep expertise, come close to devastation? To understand the magnitude of this error, we need to look back at a critical point in Syngenta's history, particularly in the mid-2010s, when the world's agricultural markets were undergoing significant shifts. The company's missteps during this period became a cautionary tale for the global agribusiness industry. Syngenta had been developing a genetically modified GMO corn seed called Agrisure Viptera, or MIR1662, which was designed to combat a variety of crop-destroying insects such as corn earworms, western bean cutworms, and fall armyworms. These pests were notorious for causing significant damage to corn crops, leading to reduced yields and financial losses for farmers. MIR162's advanced technology offered a solution by incorporating a gene that produced proteins toxic to these insects, while being harmless to humans and other non-target organisms. The U.S. Department of Agriculture, USDA, granted approval for MIR162 in 2010 after a comprehensive review, deeming the GMO safe for agricultural use and human consumption. This approval was a significant milestone for Syngenta, positioning the company as a leader in the development of innovative agricultural biotechnology. Syngenta believed that MIR162 would be a game changer, giving farmers the ability to protect their crops more effectively without the need for excessive pesticide applications, thus reducing costs and environmental impact. By 2011, Syngenta began aggressively marketing Agrisure Viptera to American farmers, touting it as a revolutionary product that would not only protect crops from destructive pests, but also enhance productivity and profitability. The company's promotional efforts emphasized the increased yield potential of the GMO corn, projecting that it could significantly improve farmers' revenues by minimizing crop losses. This was especially appealing in a competitive agricultural market where efficiency and productivity were critical to survival. Farmers were quick to adopt MIR162, encouraged by Syngenta's promises of higher yields and better pest control. The early results appeared promising, with many farmers reporting substantial reductions in pest infestations and noticeable improvements in crop health. The introduction of MIR162 seemed poised to reshape corn production in the U.S., helping farmers manage pest threats more effectively and boosting their overall profitability. But there was a major flaw in their plan. China, a key buyer of U.S. corn exports, had not yet approved MIR162 for importation. This was the billion-dollar mistake. In 2013, shipments of U.S. corn, which included MIR162, were sent to China. When Chinese officials discovered the unapproved GMO strain in their imports, they rejected more than 1.4 million metric tons of U.S. corn, a staggering financial blow to American farmers and the broader corn export market. The fallout was swift and severe. From 2013 to 2014, U.S. corn prices suffered a sharp decline, dropping by nearly 11%, driven largely by the sudden disruption of trade with China, one of the largest and most lucrative markets for American corn exports. As China began rejecting shipments of U.S. corn, that contained traces of Syngenta's genetically modified MIR-162 corn, the entire U.S. agricultural industry was thrown into turmoil. This unexpected regulatory roadblock caused a dramatic oversupply of corn within the domestic market, leading to a significant price collapse. With millions of tons of corn sitting in storage, unsellable in one of its primary export markets, farmers and grain traders were left scrambling to find alternative buyers, often at lower prices. By 2014, the losses inflicted on the U.S. agricultural industry were staggering. Industry experts estimated the total economic damage from China's rejection of MIR-162 tainted corn had reached around $5 billion. This figure included not only direct losses from the decline in corn prices, but also the broader ripple effects felt throughout the supply chain. Grain exporters and traders, unable to sell their corn to China, were left with vast unsold inventories. Many farmers who had initially planted MIR-162 corn, expecting higher yields and increased profitability, now found themselves sitting on crops they could not sell at profitable rates, if at all. The situation worsened as other international markets grew cautious, fearing that their own corn supplies might be contaminated with the GMO strain, leading to broader concerns about the integrity of U.S. corn exports. The global backlash further depressed demand, and with domestic markets already saturated, prices for corn continued to plummet. As the crisis unfolded, many farmers found themselves facing significant financial strain. Small and mid-sized farms in particular struggled to stay afloat as they bore the brunt of these economic losses. The rejection of U.S. corn by such a major importer as China meant that storage costs also skyrocketed as farmers were forced to find ways to hold onto their crops while they waited for alternative markets or hoped for an eventual resolution. The impact of these unsellable inventories was not limited to farmers alone. Grain exporters whose business models relied on steady trade flows found their operations severely disrupted. Large grain traders like Cargill and ADM, who had traditionally moved vast quantities of U.S. corn to international markets, suddenly faced logistical and financial bottlenecks, leading to reduced revenues and strained relationships with key global buyers. Transport and logistics companies involved in the shipping of agricultural products also felt the ripple effects of the trade stoppage, as fewer shipments meant fewer contracts and reduced business activity. As the losses mounted, frustration grew among farmers, exporters, and agricultural organizations, many of whom felt that Syngenta had acted recklessly by releasing MIR-162 corn into the U.S. market without ensuring it had gained approval in crucial markets like China. This led to a wave of lawsuits against Syngenta, with farmers and grain traders seeking compensation for the billions of dollars in damages they claimed to have suffered due to the company's mishandling of the MIR-162 situation. Tens of thousands of American farmers, as well as grain handlers and exporters, filed lawsuits against Syngenta, claiming the company's actions caused significant economic harm. The legal battle was unprecedented in scale. By 2017, Syngenta faced multiple class action lawsuits, alleging that the company had acted negligently by releasing MIR-162 into the market without securing all necessary approvals, particularly from key export markets like China. At the center of these lawsuits was the question of whether Syngenta had misled farmers by rushing to commercialize MIR-162, ignoring the risks to international trade. The U.S. District Court in Kansas became the epicenter of the litigation. After months of legal wrangling, Syngenta agreed to a settlement of $1.51 billion in 2018, one of the largest ever in the agricultural sector. The company's decision to settle reflected the massive legal exposure it faced, as farmers and exporters sought compensation for the losses they endured. Although the billion-dollar mistake could have been fatal for Syngenta, the company managed to pivot and rebuild. The settlement allowed them to put the legal nightmare behind them and refocus on their core business. In 2017, Syngenta was acquired by the China National Chemical Corporation, ChemChina, for $43 billion, a deal that solidified its place as a major global player in agriculture despite the legal setbacks. In the wake of the MIR-162 crisis, Syngenta shifted its strategy. The company placed a greater emphasis on regulatory approvals, ensuring that any new products it brought to market had the green light from all major trading partners. This new approach aimed to avoid the pitfalls of the past and restore trust with both farmers and international regulators. The Syngenta MIR-62 incident highlighted a critical lesson for agribusinesses: the importance of aligning product rollouts with international regulatory standards. The pressure to innovate quickly can sometimes lead companies to overlook the potential risks posed by lagging approvals from key global markets. For Syngenta, the failure to anticipate China's rejection of MIR-162 was a billion-dollar mistake, one that cost farmers, exporters, and the company itself dearly. Today, Syngenta remains a global leader in agriculture, but the memory of the MIR-162 controversy lingers as a reminder of the costs of rushing innovation without proper foresight. For the industry at large, this serves as a cautionary tale that success is not only built on innovation, but also on carefully navigating the complex web of global regulatory systems. In recent years, Syngenta has diversified its portfolio, focusing on sustainability and digital agriculture. In 2023, the company launched a series of initiatives aimed at reducing agriculture's environmental impact, including investments in soil health and carbon capture technologies. These moves come as part of Syngenta's broader effort to reshape its image and build long-term resilience in a rapidly changing industry. While Syngenta's billion-dollar mistake nearly crushed the company, it also served as a catalyst for change. By learning from their missteps, they have not only survived, but also positioned themselves as a more adaptive, forward-thinking player in the global agricultural landscape. What do you think about the controversy that haunted Syngenta for years? Share your thoughts in the comments section below. Thank you for watching.